Welcome to the C-Suite podcast with me, Graham Barrett. I'm here in Frankfurt for Sibos, the global financial services event. We're producing these episodes in partnership with LSEG Risk Intelligence, who provide a range of solutions to help organizations effectively manage risk and reduce fraud. I'm going to be sitting down with a number of the key speakers and attendees here on LSEG's booth to gain a real snapshot of the key talking points here at the event. I really hope you enjoy these conversations. Pleased to say I'm sitting down with David White, Global Head of Product and Data at LSEG Risk Intelligence. David, how are you?
Very well, good to be here again.
Yeah, well, you say again, we sat down, didn't we, at Money 2020 earlier this year. You outlined some of the trends in, identity fraud and theft. You talked about 1 in 50 or the LSEG film, which was superb and very worrying, actually, at the same time. You've now published the 2025 LSEG Risk Intelligence Global Survey. So we'll go into some of the findings in a moment. But first, tell me about the motivation behind that survey.
I think we're in an interesting time. This year, I don't think any of us could have escaped the AI trend, shall we say, since it is literally everywhere. And as such, I think that's doing a number of things in the market, both from a point of view of the challenges and the opportunities. So the survey was really trying to find out what's top of mind, what are the things that, to a certain extent, are keeping people up at night as a result of just all of the change we're seeing in the marketplace. So it was a good time to go out, find out what people were thinking and report it back.
Yeah, now I was looking through the survey and there's quite a bit about the challenges that financial institutions are facing around customer screening. So what did the survey reveal there?
Well, I think and this has been a trend really since COVID, that customers, the end customers want speed. They want faster payments, they want things instantly. Increasingly we're seeing banks and non-financial institutions trying to embed payments into products, etc. And I guess that's great. And as a consumer, I'm always happy when something happens instantly and I get that payment through. I guess the challenge that raises is it also means you have to do all of the things to ensure that payment is safe quicker. And those are things like screening, those are onboarding, these are all things that now we're seeing just that increased pressure in the marketplace to be more responsive to your customers, to deliver the service quicker, which means all the things that sit behind it have to be quicker.
Yeah. Now the stat that really jumped out for me in the survey was that 98%, so pretty much everyone, 98% of institutions view real-time access to sanctions and risk data as critical. Now, did that surprise you at all, and what's holding back further adoption?
I guess it didn't surprise me.
Right.
We've seen the EU be very clear from a regulatory point of view that they would like immediacy in particularly a sanction list being updated and the banks being able to action that, or whoever's making a transaction or onboarding action that. So I guess it's not surprising. I guess what was surprising around that survey was the concern this was creating and some of the operational problems this was creating, where we're seeing a number of, I think it was 75%, we're seeing high rates of false positives, and obviously that's just slowing the system down, that's creating cost in the system. So I guess it wasn't a surprise, but maybe the magnitude of it really confirmed a suspicion we had that this was really becoming quite an acute problem in the marketplace.
Yeah. Another key area of the survey, which actually we've spoken a lot about in the conversations I've been having here at Sibos, was about the balance between AI and automation, and whether AI is going to completely replace human judgment. But I think from the survey there seems to be this balancing out, certainly for the time being, that we need that human checking process in place.
There's a lot of opportunity with AI, and I think we can all see that, particularly in an environment where cost of compliance has just gone up year after year after year, which means the cost of banking for everybody, both the banks and obviously the consumers, has gone up. So I think we can all see there's an opportunity to use AI to reduce that cost of compliance while keeping the quality up, which is the essential part. I guess the balance we're all working with is you can't do the automation at cost of the quality. So it's always about balancing the fact that there are some judgments you want humans to make. There are lots you don't. There are lots that are fairly straightforward, that a machine, and probably an agentic solution could make for you. So it's really about balancing that. And we very much view it as, it's enabling the human to be faster, quicker, to manage more workload. But at some point in the process, it's still about the human making the decision. It's just how do we make that process as efficient as possible and get rid of a lot of that work that simply doesn't add value, is better done at that sort of agentic layer, while leaving those key decisions in the hands of an experienced professional.
But of course, as we've spoken before, AI is a double-edged sword, isn't it, in terms of AI in the hands of fraudsters. We've seen a lot of high-profile cyber attacks this year alone. What are your thoughts? What's the map through this? How is this going to evolve?
I mean, I guess the sad thing, and I did a talk on this quite recently, is the cost of committing fraud has gone down substantially.
Right.
Because now they have hugely powerful tools that are available for virtually nothing.
Yes.
So what does that mean? It means we're seeing two things. One, we're seeing the sophistication go up. Some of these deep fakes now are indistinguishable. And it looks like there's going to be more of that technology coming out over the coming weeks, which is further going to make that a difficult problem. And the scale of it has gone up massively because now some of the constraints around how you could undertake some of these scams, etc., have been removed because the fraudsters are automating. They're going from a fairly manual process to an automated process. So I think that's just going to put more and more pressure on the system, again, to that faster point. They're iterating quicker and quicker. They're pushing out more fraud. That puts more pressure on the system, which means the responses have got to be that much more efficient. So I think it's a cycle we're seeing accelerate. It's a cycle that we've seen before, but I think the scale and speed of it is pretty unique at the moment.
And I guess, just a final question then, as a bank, how do you future-proof your business? Because if we're saying that these attacks are going to strengthen, are going to escalate, how can they do that?
I think, and we do talk about this in the report, I mean, one of the first things is a lot of the ways to protect yourself are to support those automation systems with high quality data. And I think one of the things we're seeing as we move into this agentic era is the quality of data is even more important. You don't have a human making value judgments when they're eyeballing the data now. You've got a machine that will act on the data you put in. So I think as you have to automate to manage that rise of fraud, to manage that rise of payments, then the criticality of the data going in just rises. And I think that's one of the essential things we pull out in the report, which is you really need to know where your data's from, you really need to understand the quality of it, and you really need to understand that your partnerships there have the flexibility to respond to this growing market concern.
David, thank you as ever. It's really good to sit down and speak with you again. Thank you for hosting us on your booth again. It's been great, and we look forward to the rest of the conversations.
Thanks for having me. It's been great. Thank you.
Joining me now is Ioana Boier. She is Global Head of Capital Market Strategy at NVIDIA. Hi, Ioana. How are you today?
I'm well. Thank you for having me.
No, not at all. Thanks for joining me here at Sibos. Now, talk to me about some of the exciting innovations that you're seeing at NVIDIA, specifically in AI, in cloud infrastructure. Obviously, those are some of the big talking points here at Sibos. What's your take on these areas?
So my take is that it's a lot to do with artificial intelligence, and the way this is appearing in the enterprise context has to do with firms building what we like to refer to as AI factories across the value chain. So basically in pre-trade, execution, and post-trade. And we help with bringing up these factories, whether they are in the cloud or on-prem. We have a lot of partners among all major cloud providers. We also work with what we call NVIDIA Cloud Partners. And we provide essentially reference architectures for firms to be able to build what they deem is their most important workflows into these, bring them into these AI factories.
Okay. And this is obviously specifically applied to capital markets, isn't it, to make that distinction?
That's right. And I should emphasize that it's also not only hardware, as people often associate us with the hardware part of things, but it's a full stack solution and reference architecture that's validated with a lot of firms and customers in finance and outside. And the software piece is really important because it's not enough to build the hardware part, but you have to use it optimally, and you don't have to build everything from scratch.
Sure. Well, let's stick on AI because your speaking session here is about how AI is transforming post-trade, isn't it? So let's talk a little bit about that. Where do you see the opportunities for AI in clearing, settlement, reconciliation, and how quickly do you think this will change the way capital markets operate?
Yeah, I mean, I think AI is relevant at every stage of those workflows that you mentioned. And essentially, it boils down to accelerating the time to decision making, transforming, let's say, overnight workflows into real-time workflows. I think that's particularly important to payments. And also building more robust workflows when it comes to, for example, some of the major aspects that we heard yesterday, like fraud detection, trust building, having payments that are secure. So, for example, we provide blueprints, which are essentially template workflows that showcase how to use artificial intelligence in the context of these fairly complex type of processes, right? So going from the data curation part to training the models to the inference aspects, and thinking how to essentially deploy these solutions at scale.
Okay. How do you think we're placed to combat the threat of fraud? Do you think that we have the tools in place, we just need to use them better, or do you think there's still work to be done in that area?
I think there's still work to be done. I mean, I was reading somewhere that the losses from fraud are somewhere around, projected around some 400 billion over the next 10 years. So I think artificial intelligence is a true game changer in that space because a lot of the traditional techniques, methods are a little bit more brittle, right? Like they're more rule-based, and it's difficult with rules to capture all the situations. The fraud is becoming more and more sophisticated, so I think we need to answer with more sophisticated solutions to combating it.
Yeah, because it's a never-ending battle, isn't it? You know,
that's right.
The tools to combat it grow more sophisticated, but then so do the fraudsters as well. So
absolutely,
it's so difficult, isn't it? So, well, how do you? Let's just finish up talking about the relationship between payments and post-trade, which is kind of what we've been talking about here today. I mean, do you imagine a scenario in the future where those two areas could kind of blur into one, could merge into one?
So I think that that's an interesting thought, right? So if we think about payments, that's about a transfer of money, right? And then post-trade, it's about securities, right? Functionally, I do see them coming together, right? So this idea of value transfer and then risk management, right? So in the context of the processes themselves, I think that they're likely to converge under that umbrella. I think where it's less likely in the near future is on the institutional level. Like there's legal processes, there's compliance, there's different kinds of organizational challenges to just merging those two. But I do think we're here in the London Stock Exchange booth, and I think they definitely are a firm that they're sort of the linchpin bringing together these types of solutions and illustrating how some of that conversion can actually happen. They have clearing, they have data analytics, and of course, leading with AI.
Yeah. So you welcome that you know that convergence needs to happen. You don't think they need to be distinct?
I think it's more about what's best for that space rather than what I think. But I do think that this migration or movement towards models that are more foundational, that can handle both cash and securities, that can be specialized at a later stages, right? I think that's seems like the more efficient way to proceed.
Yeah, listen, it's a fascinating area.
Absolutely.
I really thank you for your insights here today. Ioana, Boier, thank you for joining the podcast.
Thank you for having me.
Okay, I'm pleased to say I've been joined by Geoffrey Dezoppy, who is the Managing Director of Avaloq. Geoffrey, very nice to see you.
Likewise, good morning, Graham. How are you?
Yeah, I'm really well, thank you. Could you start with telling me a bit about Avaloq? What do you guys do?
Absolutely. Avaloq is a leading provider of wealth management technology and services to financial institutions globally. So we celebrated 40 years this year. We were established in Switzerland in 1985, and now we have offices across the globe, the latest one being in New York City, which we just opened last month.
Oh wow,
and,
exciting. Yeah.
Very exciting, very proud of that. It's not easy to set up a shop in North America, so we did it. There's still a lot to go.
Yeah.
And so we basically provide mostly core banking systems. That's what we're known for, but also digital solutions for the end client. So typically, the individual, when they open their mobile banking app, it might very well be one that Avaloq developed.
Okay. Yeah, perfect. Now, you've been busy here at the event, haven't you? You've been on a session which was entitled Tech-Driven Wealth Management, What Advisors Need to Meet Investor Expectations.
Yes.
Sounds great. What were the key points you made?
Well, the key points on the investors' behavior were that, first of all, they are becoming more confident. By that, we have identified that they can now invest more. 30% of them actually have increased their investments in comparison to 2024.
Okay.
So I think that is a good signal. Confidence is good for everyone, right? And confidence also means investing in riskier assets than before. So we see a rise in digital assets and private equity. The second point was that trust and communication between the wealth managers and their clients is extremely important. Some investors have stated that they could leave their banks or their wealth managers if they didn't have this transparency, this trust. And then finally, again, going back to the confidence, crypto is really on the growth. So luckily at Avaloq, we were able to follow those trends prior to identifying them, if I may say, by providing the solutions that our banks need in order to fulfill those requirements or to answer those new demands.
Well, let's keep on the subject of trends and innovations in the payments industry. What are the ones that you're keeping an eye on at the moment?
Well, today is October 1st.
Yes.
Come next Thursday, October 9th, we'll have the full adoption of instant payments. So clearly that has been on everybody's mind for a while now. It started with the incoming instant payments in January, and now we have to also deliver outgoing instant payments and verification of payee. So in order to make that possible, we needed innovation. Have you ever thought, Graham, how can a bank make sure on the weekend when their systems are down that you have the balance available to send me money within 10 seconds?
Yeah, it seems to go through okay, yeah.
Well, it happened because of the innovations that all the...
there's no more waiting until Monday morning, is there?
No, there you go. So that's super important. Cash transaction checks, the 24/7 enablers, and particularly the end-to-end coverage. So when it comes to the payment life cycle, from the initiation to the settlement on just the one platform. So for me, that's the key innovation.
Okay. And then on the flip side, one topic we're keen to address in all these interviews is payment fraud and how that can be best tackled. What's worked best at Avaloq?
Yeah, what we've identified is that today you have to make the most of all the tools that you have available. So I'll start with AI, and AI-driven fraud prevention works really well. It can detect some behaviors that are not your normal behavior as a consumer, and also biometrics, for example. If you log into your mobile device using the Face ID, as most of us do these days, that's already a lot of help when it comes to fraud prevention. So again, AI and biometrics are the ways to go.
Yeah. You think then biometrics are the way forward? Because I'm thinking now that there's the concerns about cloning and things like that, but you still think that the face recognition is our best way forward at the moment?
Yes, in case of in case of doubt, you can still fall back on the previously available methods of identification. But biometrics can only grow and take a bigger place in that particular domain.
Okay. And finally, I just wanted to ask you about regulation and talk to me about the impact that they might have on the industry. Anything you're following in that space?
Yes, I think what we're following mostly is the verification of payee at the moment, which means the control that the IBAN that you're using for this very payment belongs to the individual for which you've identified that the transaction was for. So it's basically a match between name and IBAN. And you might think, well, this is pretty obvious, right? But this is where the fraud has been coming from in a lot of cases. So verification of payee has been actually super important for our clients. So that is my message for you today. That's what I hear from the market.
Yeah. Well, we appreciate all of your messages today. So Geoffrey, Dezoppy, thank you so much for joining me.
Thank you for your time. Have a nice day.
Pleased to say that I've been joined by Aoife Doyle, who is VP Product Marketing at Fenergo. Aoife, lovely to see you here at Sibos.
And you, Graham, look, good morning, how are you?
Yeah, doing really well, thanks. Now, I know that you're speaking on a session here around Agentic AI, aren't you? So what do you see as the main benefits of that to financial institutions?
So in the context of Agentic AI for Fenergo, looking to how financial institutions can benefit for greater automation. I think we all speak about automation, but AI is maybe the piece that unlocks true automation for an organisation. You still look at an onboarding process as being very, very manual, very, very people heavy. Our research this year has shown that the people cost has increased again. The time to onboard is now 5.5 weeks for the onboarding of a corporate for a commercial and institutional bank. So if you look at that, you need to say, well, what are the tools of today that can fix the problems that still prevail year on year? So for us, Agentic AI is looking at discrete tasks within the onboarding flow to see how you can redesign an end-to-end process. So instead of a user having to discount 20 hits on a single entity, use an AI screening agent to go through the hits, give you an overview of the information that they have found. And some organizations might go as far as allow the AI to close off the screening results, or you could have a user step in and discount it there. So really, the benefits of Agentic AI that we would see is bringing greater efficiency into the process and actually using your human workforce, as it were, on higher value work and more meaningful work that you actually want people to engage with.
So you mentioned onboarding there and efficiency. So beyond efficiency, what do you think are the main ways that Agentic AI can help in that onboarding process with due diligence, but from a client's perspective?
So the client experience is very important, obviously, when you're going through the onboarding process and you're looking at saying compliance and fin crime is not a tick box. It's not something you need to do just to satisfy the regulator. It is the experience you give to your client on the way into the organisation. And if you consider that that's their first touch point with your organisation, if they're facing a very laborious onboarding process, you have frustrated them. We've seen as well from research that client abandonment rates during onboarding have increased year on year. So this year, 70% of survey respondents reported that they've lost clients due to slow and inefficient onboarding. So you're not onboarding just to be in regulatory compliance, you're also onboarding to serve a customer and fund their account or let their investment through.
Now, any conversation about AI, about agentic AI, brings forward the question, the consideration of using this in an ethical way, in a compliant way. So what is the key to succeeding in those areas?
So I think when organizations are bringing in AI systems, it is going to be quite a layered and nuanced process. So having human oversight, the human in the loop concept, whether you're in the EU when you're going to have to comply with the EU AI Act, or in wider jurisdictions which maybe are not as forthright on their regulations, you will need to have human oversight of what they're doing. You'll also need to be able to show the auditability of the decisions that the AI agent is making. So within Fenergo, in the same way that we would audit an action a human takes, you also want to audit the action that the agent has taken and show when they took it and when they looked at it. I think looking at fairness and bias within the AI and keeping a review to it. So you are going to see a lot of QA processes taking a review to say, would I have made the same decision as the AI had made? And then finally, of course, ensuring standards and security by design and really working with your security team to ensure that you're at the ISO standards, for example, that you're complying with the security regulations in the region that you're doing business in.
Just to follow up on one point you made there about that kind of check-in process at the end, do you think that's always going to be the case, certainly for the foreseeable future?
We did some research with Chartis earlier on this year where we surveyed, again, a wide span of financial institutions to say what was their appetite for full automation. 0% of financial institutions said they'd take full automation, but I do think it speaks to the fact we will never remove humans from the process. There will always be an element of human oversight, an element of a human having to know the customer. You're going to look and use your data in a much more intelligent way and really get the benefit of data and data providers and be able to make decisions of it. But you're still going to have a human to make the end decision, I think.
I think you're right. That's got to be for the foreseeable, that is going to be in place. Now let's just finish up with Fenergo's own financial crime industry trends report that you released this year. What can you tell us about that? And it's all to do with the operational costs of fighting financial crime, isn't it?
Yes, so I've mentioned one or two stats from the report, but this is our fourth year doing the report where we survey 600 senior decision makers across banking, asset management, asset servicing. And as you say, we're really looking to the trends in the industry. So what we've seen this year is a continued increase in time to onboard, higher costs in terms of people with managing your client book, periodic reviews still being an onerous piece of the business. But we are seeing that investment priorities are beginning to shift. So AI investment very high on the agenda this year. But quite interestingly, the investment in AI for fin crime operations is very high. That was 68% of respondents said that was their number one priority. And I think when we take a step back and look to that, a lot of the points that we've discussed, and when you look at the financial crime ecosystem, you're taking data from a data provider, you're doing your screening with WorldCheck. All of those pieces are actions that are happening in a wider fin crime operating system. Bring those together and put an agent on top of it. You have eliminated a lot of the waste or a lot of the time burdensome pieces that you would have in the process. So we always look to the survey as a benchmark to see where the industry is at, to look at where people's priorities are. But you actually see the pain points remain the same, but how people are looking to solve for some of those pain points will change a little year on year.
And I think what will be really interesting with the pace of change that we're seeing in the financial industries at the moment, how that survey develops year on year and what it's going to tell us next year.
Yes, and I think, if we looked at 3 years ago, we probably didn't have questions around AI. We can't, every stand in the exhibition hall is speaking about AI in some form or other. But I did hear an interesting touch point at a recent LSEG event where one of the panelists said, don't ask me to predict what's going to happen with AI beyond 2030. Because I don't know and no one else knows, which I thought was very interesting. So we're in a massive period of change. We'll be looking to see what the early adopters do and then see how that impacts trends as we go into the coming years.
We look forward to it. We better have you on again on a future episode to talk through it again. But Aoife, Doyle, thank you so much for joining me today.
Great, thank you.
Well, very pleased to say that I've got Joel Winteregg joining me now. He is CEO of Vyntra. Joel, how are you?
Yeah, I'm good. Thanks for the invite.
No, not at all. It's lovely to see you here at Sibos. Now, talk to me about Vyntra first of all, because you formed the company, didn't you, by merging, what was it, Intix and NetGuardians?
Exactly.
So what was the thinking behind that?
Yeah, exactly. So we are a new brand since June this year. And the main thinking around it is that payment is evolving in a direction where we strongly believe that account-to-account payment is the new future.
Okay.
We speak a lot about instant payment those days, and to me it's just the start of something new there, where the payment schemes such as like MasterCard or Visa, they're gonna slowly have more challenges because banks are starting to own more of the payment scheme through instant payment.
Right.
And it puts a big pressure on banks on two aspects. One is payment operations, and the other is payment risk.
Yep.
And at Vyntra, we are solving both payment resilience monitoring through transaction observability and payment risk through fraud prevention, AI-based software for that. So that's the vision and the focus of Vyntra.
Yeah. Well, listen, I'm keen to hear your insights then, because you mentioned MasterCard there and maybe the challenges that the big card networks might face. How do you see the payments landscape evolving? I mean, do you think those traditional networks will continue to prevail, or are we going to see a slightly different ecosystem?
It's interesting question
It is,
and hard to answer,
yeah,
but
I'm sure.
what I can say is some countries like Kenya, if you look at it, it's very interesting because MasterCard, Visa are not really present there. It's more for foreigners, for tourists. And they move directly from cash to mobile money and 15 years ago.
Wow.
And even 10 years ago, they were already doing payment at any shopping area at the petrol station with mobile phone through M-Pesa money in this region. So they completely skipped what we are used a bit in the region, for instance, with a card and this type of plastic money. They moved to mobile directly. And what I see is that this switch is slowly happening here. And then for sure, I suppose that consumer at the end who dictates the payment methods at the end will slowly switch from cards to some other payment methods, putting then more challenges on those card networks that are very used in some region.
It's almost like a template for how things could be and how things could have been, I guess.
Yeah. And I think it's interesting because they took a shortcut that was market-driven, mobile phone in the hands of everyone, and they completely skips the card networks that we are used to that here. But some region, they never saw it in a way.
With this change in payments landscape, obviously there are emerging threats as well in terms of fraud and financial crime.
Yeah.
How are we equipped to deal with these challenges? What do we need to be doing?
It's very broad, and the landscape of risk is very broad, very large. I think education is a key element because
of the end consumer.
Yeah. That's one of the key points that as a vendor, we always go into quickly into technology that helps solve. Yes, that's one point. But education is key because scams, they just start on Facebook, on Instagram, on YouTube, everywhere. And it's so easy to be trapped into scams. And then I think the second line of defense, it's really a banks having a proper solution in place to detect suspicious payments. And it goes by profiling customer, understanding their behavior to be able to stop fraudulent payments.
Yeah.
So I believe that that's more the way to go with a very strong fraud landscape that is growing a lot around scams.
Now we know that AI in the hands of these sophisticated fraudsters can be a huge challenge. But how do we flip that around and use AI as a force for good, if you like, in fraud prevention and AML?
Yeah, I think AI, if we look at fraud prevention, is there since years. If we look back at Vyntra, we are using that since 5-6 years, different AI models to learn about fraudulent pattern. I think one of the game changer is what we call collective AI. It's then not just to analyze data and transaction from one financial institution, it's to do it across several financial institutions. So it's to have a federated learning in a way that put the power of several banks into fraud prevention and not just the power of and the data of one bank.
Okay.
And I think that's slowly getting into the mind and the mood of banks, where compliance is often a barrier for such initiative. But I really foresee that as a future, and at least that's the future that we follow at Vyntra, to really move forward with this community scoring that we call.
So that collaboration, that word you use there, community, is so crucial, isn't it?
Exactly, and it's not just exchanging notes and meeting at Sibos and talking about fraud. It's really about automated learning across several banks, which is really a game changer.
Yeah. Are there any other opportunities that you think AI brings in the payment space? Let's just finish up with that.
I think there may be a lot on automating some processes. I think we are just with Agentic AI at the beginning of that.
That tipping point, aren't we? You can feel it coming through.
We can feel it. I'm wondering if there is a lot of buzz, if there is a reality. I believe today we are a bit more in reality because there are some robo-process automation since years that are in place, but I think with AI, we may bring them at the fingertip of a banker who's not an IT expert who want to automate something. I think it may bring a lot of value. But let's see.
Yeah, absolutely. Let's see. Well, look, I really appreciate you sharing your insights and your projections for the future. So, Joel Winteregg, thanks for joining me on the podcast.
Thanks for the invite.
Okay, pleased to say I've been joined by Mark Fieldhouse, who is Chief Revenue Officer at Form3.
Great
Mark,
to meet you.
Yeah, great to meet you. Thanks for joining us on the podcast.
No, thanks for having me.
And let's start with Form3. Who are you guys? What problems are you trying to solve?
We've been around for about 10 years now in the industry, and we the genesis of the company really was to solve an inherent problem in the industry of very rigid, inflexible frameworks and infrastructure in payments. So we are a cloud-native, API-first company giving banks immediate access to payment rails and schemes.
Yeah. And what are you seeing then in that space? What are the trends? What are the innovations that you're keeping an eye on? How is this going to affect the industry moving forward?
Yeah, the cadence is really quick now, right? So the introduction of AI, of course, there is a convergence of infrastructure play now, so cloud is not just the only choice. So we're seeing this convergence of on-premise and hybrid leading to cloud adoption as well. What that gives you is flexibility then in how you deploy payment methods and schemes. That agentification layer then becomes really crucial, of course, because if you don't have the right data or infrastructure layer. So there is a real convergence of tech. And of course, the trifactor, of course, is the quantum element that comes in. The optimists would say 3 to 5 years, the pessimists kind of 8 to 10. But
are you an optimist or a pessimist?
I'm more on the optimistic side, actually. If you look at some of the announcements with IBM and HSBC this week around algorithmic trading, that inference side for quantum is just a match made in heaven,
And on the subject of AI, we've been talking a lot here at Sibos about the potential of things like agentic AI. Do you see clear use cases for that as well?
Yeah, at every level, right? So if you think about the service that you operate in payments, for example, you are able to apply AI at infrastructure level. So where do I deploy resources just in time? You can apply it at the application level and then as a payment is in flow as well. So, there are lots of techniques now around the generative side and also the inference side for payments as well. Much of that tends to be focused on ensuring, fraud, KYC, and that the payment flow is uninterrupted. I think more importantly, introducing agentic layers to protect against now the generative side of AI, voice and video, which was once used to protect your access to an account, of course. So, that is a very fast moving aspect.
And let's pick up on that point you just made about fraud prevention, AML tools as well. How is AI helping in that space to fight back against these fraudsters?
There's a couple of areas actually, and you will hear about GPTs used all the time, generative transformers. They're only applicable up to a certain extent, so you have to get great data, that's the key. You have to be just in time, so you have to instrument as the payment is in flow. It's no good doing things retrospectively. So I think as we see the technology mature, both from cloud providers and other AI technology businesses, you'll start to see those introduced at multiple levels within that flow. So yeah, it's going to be I think the next 2 to 3 years are going to be very instrumental.
Yeah. A final question just on regulations as well. How is that shaping the landscape? Is there any particular regulation that you think is going to have a big impact here?
Not one in particular. I think the key is that, or the challenge for banks and the finance industry is that the agility that comes or is required from this sort of infrastructure and agentification needs to be driven by stability, reliability, all done under the paradigm, of course, of regulation as well. So it's not just doing things for speed and power. It has to be in a regulated environment as well. So it is quite challenging for banks to know what technology to chase, what to leave behind or wait for.
Well, I appreciate those insights. Mark Fieldhouse, thank you so much for joining me on the podcast.
You're very welcome. Thank you for having me.
Well, I'm pleased to say that I've been joined by Jim Webb now, who's head of financial institution at Zodia. Jim, how's your day been?
Busy,
Yeah.
non-stop.
Sounds like it's manic.
Absolutely. Very productive. Though.
Yeah. Well, talk to me about Zodia, first of all. What are you guys up to at the moment?
High level on Zodia, so we're a digital asset custodian. We are institutional grade, institutional first, crypto and other assets, obviously. Born out of Standard Chartered Ventures, who are a majority shareholder for us. And we have 4 other banks on our cap table. So we're a digital asset, crypto, custodian, fintech, dynamic, but built by banks, for banks.
Nice, okay. And you talked to me about tokenization then. What do you see as the most compelling use cases? What's holding back broader adoption?
So, I think broader adoption possibly was held back based on a couple of days here at Sibos. It's
no longer.
It certainly feels that way. I think, just the conversations that I've had, the conversations that I've overheard, the sessions that I've managed to have time to get to. Ultimately, it's a key topic here. Digital assets on a wider spectrum, but it's definitely a key topic. You hear blockchain this, blockchain that, but I think there's still baby steps in sense of tokenization on a whole, and where the big TradFi and tier 1 companies are sort of entering that space.
Yeah. So how do you see this evolving then? How are stable coins going to, are they disrupting the payments landscape as often is cited, and how is that space going to play out?
So again, I think it's probably a similar story. When I look at stable coins, I think, again, previously possibly seen as a disruptor, but definitely more of an enabler.
Right.
It's a different story for me in the sense that stablecoins is really about the efficient movement of money. But I think if you look back even probably less than a year, a lot of people potentially some sort of PSPs, etc. You were almost burying their head in the sand a little bit and seeing it as a disruptor. But now there's suddenly a real ramp up in the market space, and I think that what we're seeing there is the use cases for stablecoins, the benefits of that, and what that means, and people now rushing to move forward on that.
Do you have any insights into why that is? Is it just more education, more talking about it, becomes more commonplace?
I don't know if it's education as such. I think there's still a long way to go in terms of education. But I think that everything that's happened in the US, so without getting into the political side of things, the support for digital assets on the whole, I think there's always this sort of, with TradFi firms, and having spent most of my career at TradFi firms, there's always this sort of jostling, right? Nobody really wants to be first mover. Everyone kind of wants to walk up and take a look at the green or the fence, depending if you're in to golf or horse racing. But nobody wants to be the first mover and sort of jump the start. So I just think it's just timing that is happening now, that people are actually seeing. Everyone wants to be seen to do something, and we're seeing that others are doing things in the market. How do we move that forward?
And how do you assess the risk and security aspect here? Are there still risks around stable coins? Are institutions still concerned about that, and how can they be addressed?
So for me, I think, probably a shameless plug here for Zodia, but when it comes to risk management, it doesn't really change based on the asset class. It's still prevalent, but it's more about, again, goes back to education. It's more that brand awareness, things like that. So, in some ways you can almost put it as a concern, but moving from stablecoins to deposit tokens, for example, anybody in digital assets, most TradFi firms know what Circle is or what Tether is, but they still have maybe concerns about, the reserves, how they're managed, what that means, what those coins represent. Suddenly you start bringing TradFi names into it with deposit tokens, and suddenly, again, you see more institutional adoption and more people moving towards that.
And I guess all that's going to happen is this network is going to grow and grow, become more complex, I guess, as well. So there'll be a navigation needed of that complexity.
Absolutely, and I think it goes then beyond stablecoins. So for me, and I think there's been a couple of sessions, I probably won't name drop, but I'm an ex-TradFi guy, ex-FX guy, and if you think about stablecoins now, 90% US dollars, around 90% I think is US dollar denominated. That's going to continue to be the case. That creates a big foreign exchange opportunity for banks.
Yep.
Anyone the people that are now adopting the collection of stable coins now have an FX opportunity, and I think so as the network grows it will be a many to many, but people that are involved in it, and I think this goes back to your earlier question, is they're seeing the opportunities around that and what that means. If I receive a dollar dividend, spent most of my time working for US banks, I don't want to sit on a dollar dividend, right? I want to convert it to sterling so that I can pay my bills. So, there's an opportunity there, I think, for the banks.
Yeah. Well, let's just finish up with looking ahead a little bit. And I'd be keen to know your thoughts on this. Are tokenisation and stablecoin two distinct entities for now and forevermore? Or is there any way that those two things could potentially converge in the future?
Again, I think it kind of, it depends, what we're tokenising. So what we're tokenising in terms of money market funds is obviously seems to be the key word, right? But it's kind of the spearhead of tokenisation is what people are taking the small, easy step to do. Stable coins, again, there's like a huge influx, there's growth predictions, etc. I think they'll merge in the sense of service providers. They'll merge in the sense of operations, things like that. That makes sense. It's more or less agnostic. Where I think they differ, though, for me, tokenisation is really about an investment solution. It's giving access, liquidity to otherwise illiquid or inaccessible assets. And I'm kind of jumping away from money market funds and talking about the exciting stuff that we talked about tokenising several years ago in whether it's classic cars or, now there's talk of football players or football clubs and, all this exciting stuff. But that provides what would be a private investment opportunity, wider access, and so on. Stablecoins for me is still about the movement of money. It's just about, the efficiency of that, which, again, two different things. So I don't see that converging in that sense, but from a service provider, solution, etc., then, it's asset agnostic. Yeah.
Okay. Well, thank you so much for sharing your insights here on the podcast. Jim Webb, thank you very much.
Thank you. Pleasure.
Really hope you've enjoyed these conversations from LSEG Risk Intelligence's booth here at Sibos in Frankfurt. And if you have enjoyed the show, please do give us a positive rating or review on your podcast app of choice. And if you'd like to get in touch with the show, you can do that via the contact form at csuitepodcast.com. You can find me, Graham Barrett, on LinkedIn. But for now, thank you for listening and goodbye.